Small crowd on this Thursday night. Didn't really announce it in the Discord so much. Glad of you guys to be here. Nice to hear, Emil. I might be doing a little bit of back and forth tonight. I have the dog with me downstairs, and he's been in his crate for the last 2 hours, so he's gonna be roaming around a little bit. Will we be able to enter off the first? Holy shit! You're already going at it? That's awesome. I love that. Sorry, I'm always a bit of a slow start on these PA reviews. You know, we take it easy. We see how the day went. So I'm gonna ask you all as well, how'd your day go? Trading wise and otherwise. I know for myself, I'm still demo trading, which is why I'm on delayed data right now. I'm gonna need to buy that subscription again, but I'm just taking it easy. Had a nice win today, demo trading, trying to get back into it slow to leave any impulse from being away from the charts for too long, leave them where they should be. Never happening. Good. Started learning the model. Awesome to hear, brother. Awesome to hear. If you have any questions, right, at any point in time, you just tag us in general. That's why we are taggable, right? At Mentor, at Team, or just us specifically, at Ollie, at Emil, and anyone really in the Discord that's trading the model would love to help you. I'm pretty sure of that. So don't be scared of asking too many questions. There is no such thing as too many questions. But we'll be going over. I think it is your first time here, Y6, so I'm going to give you a short insight. We go over price for the day. We go over the opportunities that the Rise model provided us, but also the understanding needed to get to that specific understanding. Sorry, as I said, my dog was drinking water. I was like, what the fuck was he just eating? But we had a beautiful day, right? If we look at the daily chart and you compare Monday no news to Tuesday first news of the week, beautiful. Really, really beautiful. Nice up range to our objective. We had a nice clip that I posted on Twitter made by Emil. Thank you, brother. About the part of the weekly outlook where we talked about this specific logic. And I shared a picture in there that here I am going to pop up just so you guys can see it. I believe it is here. Instead of redoing all the drawings, I'll just refer to the question, to the picture in this specific case. Here we go. Too large. Never mind. So, as we discussed in the weekly outlook, we were looking at our IPDA data ranges and understanding that the IPDA 60 level, and more specifically SMT forming at that level, was of huge importance. It is a very key level in price, and for SMT to form at that key level in price, it is a move of importance. So we're anticipating higher prices off of that idea. Now, if we are anticipating higher prices with this SMT, of course, at a key level in price, and at a specific time, which we'll talk about deeper, the open of a month, right? This was the day of the first official week of the month, which wasn't a half week. Well, we were looking for higher. Okay, cool. Well, what's our higher objective? As we always say, we look at premium and discount, and we look for our premium internal range liquidity, which is more specifically our first premium in efficiency. In this case, it is the high probability bearish order blocks on both assets. Why is it high probability? Because it is going through a fair value gap. Why is this fair value gap not in premium? Well, of course, it's not part of it, but if you include the volume imbalances, as you always should, you'll notice that it is not in premium. It's at equilibrium. So I disregard this whole inefficiency, which we will utilize in the future, in the coming days, pretty much, but not utilize right now. Our draw was very clear, and you could also target mean threshold of that order block, or more specifically, higher time frame quarters. Whenever I have a huge range like this, like if we look, you'll notice that this order block is 760 handle. I like to also get halves of the quarters, so the eighth. I just can't pronounce this really well, so I tend to just skip the pronunciation parts. But I'm going to look at these eighths of my objective to tell me when is it going to stop, when is it going to start retracing, using these levels specifically. So all of that to say one very simple thing, higher time frame context today was super clear. We were looking for higher, as we stated in our weekly outlook, and we had a very clear objective, which we'll look at in a sec and see that price tag to it beautifully. Now, since we have higher time frame SMT, right, at the moment, the same daily SMT we're talking about, you don't need necessarily lower time frame SMT to confirm your idea, but it is always welcome. It always provides higher probability compared to it not being present, right? At all. And today, just looking at our 15-minute chart, we had no definitive SMT form near our price. All right. We did once we go towards lower prices, and we can notice that through the retracement into this 15-minute inefficiency formed at 8 o'clock. So if I just point it out, you'll notice that NASDAQ is not retracing into it, while ES did on this 8:30 candle, which more specifically was our news for the day. We had, if I'm not mistaken, PPI. I am going to go have a look. Sorry, guys, schedule tonight has been a little bit crazy. I just managed in time to hop on here. So yes, PPI, more specifically, we had our 8:30 news. I'm going to prop it up in this chart. Why not? And we formed SMT at this time. As I explained beforehand when showcasing SMT, divergence in the ways inefficiencies are filled is just a way to notice lower time frame SMT, right? So if we go to that level, you'll see one very specific thing, divergence. And I'm going to utilize this swing point so it's easier to visualize, but there's also SMT right between these two, right? But there is SMT here with ES being the weaker asset, so you would look for longs, as explained by our higher time frame context, to our, here I'll note it out, to our bearish high probability order block. So let's actually type it out the right way. High probability order block from our daily chart. Let's just put that a little smaller. Sorry, I just noticed that these quarters are wrongly drawn. So I am just going to adjust those all the way down here. And if I look at, I guess it's my order block line that's on the opening price and not the low. Since it is a high probability order block overlapping a fair value gap, we do understand that it is high probability and we want to utilize the entirety of the range. To reiterate, you have your objective, you have higher time frame context with the SMT at the key level, you have lower time frame SMT at a key point in time, your news, which interest rate releases often run on side with price, CPI, PPI, PMI, they often run on side with price. And then after all that, you will look for a unicorn to form to head to your objective. And as we can tell, it hit at 9:32, so you did not have a lot of time if you were waiting until 9:30, which I always say to do, but you still had opportunities, so we're going to go over it. I'm just going to plot this as the fair value gap so we can easily see the midpoint. And of course, as I just stated, right, utilizing the volume imbalances and see how we utilize mean threshold. So ES was the weaker asset. So ES closing below, consequent encroachment, that mean threshold is not indicative of anything. Stronger asset closing above is indicative. You also had even closer SMT. I believe I was looking at this swing point specifically, exactly higher on NASDAQ and lower on NQ, remaining consistent. There was also some SMT at the highs right here, with the highs being taken out at this level, while ES did not take out these highs at this time. So you had SMTs on both sides of the range, which is a classic, I'm looking for the exact word. I'm going to use the word quality, but it is not the right word. But it's a classic thing that happens when you have consolidation, right? SMT on both sides of the range, search and destroy parameters. But anyways, you are waiting for 9:30. Now we will look exactly at 9:30 and see a beautiful thing happen. As we always say, your unicorn forms there. So of course there is a more recent, but if you look in the past and you look at our most recent breaker block before that one was formed, right? So at 9:30, our most recent breaker block is this one. If we look, we have an overlapping PD array, onside PD array, of course, which forms a unicorn. So it could have been that simple that at 9:30, exactly at 9:30, since you're following your rules and you're waiting, you enter on price. That is the purely mechanical aspect of the model, which is, I will showcase different understandings of the model, but the purely mechanical understanding, if a bot was to trade my specific model, the Rise model, it would enter here and use this PD array, and this PD array. So the order block, the inversion fair value gap, and the fair value gap as invalidation points. You could also at that point have the inversion fair value gap, but not if you're entering on the open, if you're entering on the close. That gives you an 11.5 point stop and 3.48 R to your high probability objective, your daily order block. Now that is purely mechanical. As I always tell my students, I never enter trades at 9:30 because there is spread coming from the volatility, and there is so much that can happen in one candle when we are talking about the 9:30 candle. So I would wait for an on-side confirmation, just like I would in a continuation entry, meaning I need a confirmation that we are looking for higher prices, and that can be seen through the form of a change of a state of delivery. Now, a change in the state of delivery can be the formation of an order block, but it can also be the invalidation of an offside PD array. So in this case, the invalidation of a bearish fair value gap, making it an inverse fair value gap, hence giving you your entry right here, and stop at this time would have been at 9:30 open, which I didn't want to see flip. But if we are conservative, it would be at this specific low. That formed SMT, by the way. I think I forgot to say, but we had, oh no, that didn't form SMT. Sorry. I thought I saw that for a second, but no, we were lower on both assets. Now, if you look at this and this 2-minute trade, not even 2-minute trade, pretty much because you entered in this candle, this is pretty hard to catch. And if your objective was here, you would look for higher forwards because that is very low RR. And when you have unclear objectives, higher time frame, right? We're looking, as we stated at the beginning, right? What are we looking for? Higher time frame ACE. So those are your objectives. Well, you're going to use standard deviations in the short term to be able to define high probability objectives. For example, that -1 standard deviation. And by the way, for I know why 6 you're new here, the reason why I'm not looking at ES is because I'm considering a long. If I'm considering a long, I'm going to look to trade this stronger asset. And SMT is telling me that NQ is the stronger asset, so I'm not looking at setups possible on ES that maybe have delivered better. It doesn't matter because I'm trading the stronger asset at that point in time. In this case, you had 1.44 R to your bread and butter, which aligned with your daily order block, and then you could have held all the way to 2 to 2.5, which is your reversal range, for another take profit. 2.37 R aligns with everything. Why did you draw your projections there? I'm utilizing breaker block standard deviations, which is a bit unconventional for ICT traders, as I've noticed. But I've actually made a detailed thread analyzing the statistics of standard deviations, and more specifically, breaker block vs manipulation leg, which on a regular day, you'd see a trader, an ICT trader, use the manipulation leg to have projections. But I did a complete thread showcasing why for specific objectives, it is better to utilize breaker block. Yeah, cool. I can teach you some new stuff. But if you want to see the results from that study, by the way, you can head over to projects under the Rise category in the Discord, right? So basically the channel just above us at this very moment. And in projects, you'll see, what did I call it? Standard deviations with breaker blocks study. And in that little project square, basically, you can click on it and you'll see the thread and the complete Notion document going over all of that data. Thank you, Emil, for linking it. I was having a hard time there. I appreciate that. But yeah, so a very, very quick trade for very quick R due to the stop. If you're asking me, I would say you need to wait until after 9:30, so wait for that confirmation on side, just because you'll end up getting spread out too often if you're taking trades at 9:30. So definitely availability there, but if you've already taken profits, your stop is break even and you just got stopped out on the remainder of your position, which for me specifically, I was demo trading this morning, was 25% just in between both. I didn't reach all the way to one standard deviation, and 25% here, so half of my position got broken even. Now, if you are an advanced Rise trader and you missed the first entry, now there is also this, which is a unicorn in line with Rise. And at that point on, you're looking at this breaker and this fair value gap and entering here. That's what I meant when I started this and said there were multiple different entries today. Because if you're entering here, you're utilizing the same rules, right? For your PD array, for your stop loss placement, sorry. So you have this fair value gap, this inverse fair value gap, and this small fair value gap. So your stop is at the low of the fair value gap candle. And as you can see, this was definitely a very good setup that, yes, did form a lot of consolidation. But if you had the right entry, meaning you weren't late to entering here, well, you would not have gotten stopped out break even. So you could have taken profits at 2 to 2.5 standard deviations. But for 0.86R, I'm waiting all the way to 4 standard deviations. 1.9R, that is a beautiful first take profit. I usually tend to try and align these take profits with 2R, and then out of luck, right, it truly does look like hindsight, which is why I'm showcasing it the way I am, but very close to your stop loss. In general, I would have entered a tiny bit late and that would have stopped me out, for example. So it's nice to see, but it is not conservative. It is not pessimistic to look at this and say, oh, I could have traded this perfectly. No, there were a lot of different unicorns that gave you a lot of different rise models. But the truth is, it's either you approached it purely mechanically and entered at the open, right? The first setup that we saw, and you could have taken profits here and then held a runner for the rest of the day, or you took what I traded because I wait for additional confirmation in these conditions, and you managed to get to take profit 1, take profit 2 before then getting stopped out. And now from that point on, based on your different risk management rules, for example, when I have a win, I tend to not trade for the rest of the day because I'm happy with my progress. Even if the win was, see, that's 1.2R at 1.14R. No, I'm saying that wrong, right? Yeah, I guess it is. So whichever it is, right? Let's just round it up and say 2.2R realized because you're taking profit 50% of your position there, or even 25%. So 0.6R and you made 0. something 35R. So you ended up the day up 1R. Let's just round it up because my brain is not okay for maths. I've been doing statistics the whole day. So you ended up the day almost up 1R. If I'm there, honestly, I'm just done for the day. Why? Why risk it? I have a winning day. Let's just let that run my consistency stats up. Why not, right? So I would be done at that point, and yes, of course, be mad that I didn't take a continuation entry, but I can't predict this in advance. So the truth is, for me today, I traded this, and I did re-enter on a confirmation of, again, right, because retracement into the unicorn, I did not enter here, so I waited for it to go down lower. There was confirmation here. There was SMT at this level. And I have a specific rule that says that anytime I get stopped out due to SMT. So as we saw from the entry here, I'll actually put it back and just remove the PD arrays for a second. With this entry, you got stopped out right here, but I got stopped out on SMT. So I have a very specific rule for that. When my idea is still valid, but I get stopped out due to SMT, I'm allowed to take a 50% reentry, meaning 50% of original risk. And all I wait for is a confirmation. So for example, disrespecting a bearish array, right? What we just did for the previous entry. This is a bearish inversion fair value gap from this point on, where we close below it. So now once we close back above it, that is a sign for me to take a trade here, invalidation point at the SMT, which frames my idea. And then I can take a continuation. As you can see from there, well, again, same thing. Deep retracement, barely not stopped you out if you had the perfect entry. I just decided you would have waited for the candle close here. So I just put my entry at the open of the following candle. But see, in this case, I'm probably slipped to here, and I just ended up getting broken even at this point, right? So definitely a little bit higher resistance in this case. But if you had the correct first entry, or even the mechanical first entry, as we just showcased, you would have been fine for the whole day, had a beautiful trending day higher, and you would have been very happy with your results. And that's all based on the high probability order block, right? And as we close above each of these quarters, I'm looking for us to start respecting this level. And as you can see, we started here, and that tells me that we're going to head for the second quarter. Well, I can target the next, eighth in this specific case. And then once we start closing below it, it's consolidating. From this point on, I would trail my stop. 146, I would probably gotten stopped out here due to trailing my stop aggressively, after we close below it. There's multiple different in-depth ways to utilize these PD array quarters, or in this specific case, eighths, but I'm not going to go deep into it because we could spend 2 hours talking about that, and I have a full class on that, as my students will know once we dive into advanced concepts. Do we have any questions? Because, on these days, you guys are starting to know me now, and you're starting to get that the trade was here. So am I going to look for continuation opportunities? No. Because unless you entered early on, you were too late. And if I'm looking at my chart here and I haven't not traded, then I don't have a trade because price already ran too much. So I never consider other opportunities, because you never would if you're trading my model, because you're looking for that first one. And if you miss it, you missed it. Too bad, so sad. Go next. And when I say go next, I say wait for the next day. Yes, as Emil just stated, it's lower probability the further you go away from that entry. That was your high probability entry. You're not in there? Well, too bad. And would I consider a retracement? No, not at all, because I'm seeing us doing a higher time frame reversal, so I'm very bullish, and my next objectives are higher. Now, could CPI form a retracement lower? Possibly for the rest of the week? Yes, right? So I'm going to be on the lookout tomorrow. Pretty much, if you guys want the simple, straightforward answer, the direction of the CPI fair value gap will probably determine my bias tomorrow. I'm going to be looking for both longs and short, and I'm going to look for the highest probability setup in there. But I am unsure of specifically what I want to see until I see London, and then at New York Open, I'll give a little update in the Discord to share what I see. I'm not seeing any of you guys type. You have the opportunity to ask any question you want. If you don't have any, don't waste your time, right? But if you have any, now is a great time before we end this quicker price action review. We've actually been here for only 20 minutes. Feel like I've been talking a little fast tonight, so I apologize about that. No questions. All right. Well, on that note, guys, I wish you all good luck trading tomorrow. As I said on New York Open, I'll give a little update as to what I think will happen. And I wish you all a good luck trading, a great night to you all, and we'll see each other tomorrow for another one of these price action reviews. It's my pleasure, Y6. Thank you, Loomis. I appreciate that. You guys have a great night.